What is good, guys? It's Ray J back with another video. And in this one, I want to break down what's going on with the overall market, why Tesla, SPY, Nvidia, and the QQQ saw some downside for today, what's going to happen for tomorrow as we have the FOMC minutes coming out. I'm going to do my best to be as unbiased as possible when talking about how the market could move going into tomorrow. But before I break anything down about all this information, before I talk about what you should be watching for as a Tesla investor or trader, and anyone who's trading other tickers as well, let me just mention a couple of things before starting. I'm firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends in just one day. It ends tomorrow, so check it out before they run out. With that out of the way, let's get on with the video. All right, guys, so looking at the market, we saw something very interesting. Now, in my videos from yesterday, I called some upside being very probable for the markets because of these technicals that formed. But unfortunately, technical analysis, it could be very useful. It could be right the majority of the time, but it's not always everything because there are external factors. And let me give you an example. What if the market was pumping and pumping and pumping, looking very, very bullish, then all of a sudden, the next day, you could be anticipating more upside just based off technicals as everything was holding up. But then what if the next day there's a new virus that came out, a new war broke out, or something really bad happened to happen that you weren't really expecting? And the market could always make an opposite move. And that's just part of the entire process when trying to trade or invest. So what happened yesterday? Technicals look bullish. We had a nice inverse head and shoulder structure on SPY that developed. We saw a lot of these for many tickers out there. Nvidia was just ripping and ripping and ripping. Aapl had nice inverse head and shoulders too. And we didn't really meet our full potential during this move because of all this bad news that came out for the markets. So I really couldn't really foresee the bad news. I can't really predict bad news that comes unexpectedly. And despite how bullish we were looking, unfortunately, this still led to downside because the news ended up trumping these technicals. And sometimes this happens. It is what it is. Now, when this happened, okay, when this ended up happening, I knew the market could see some downside. So I released a video a little bit after the market opened, just a little bit into it. And I told you guys that Tesla, we have this big warning coming out. Tesla could see 232.5 or lower. We could even see it get closer to 230. I told you guys that if SPY continued to break below its support, we're going to be watching 442. And for the QQQ, we had low levels as well, not to mention Nvidia. I was talking about these things dropping, and that did end up playing out. So I did redeem myself to some degree for what I was saying yesterday. And when it comes to all of this, it's all part of the market. Sometimes unexpected things could happen. We can't predict everything perfectly. We can't always predict the news, but that's once again just part of the process. And I warned you guys about this intraday in the very, very beginning of the day. So I did try to help you guys out. And if anything, always remember that the news is important, so pay attention to that. And now we're going to just talk about the market for now. So what happened, right? We had this nice setup. It ended up failing to play out in the middle of this inverse head and shoulders potentially playing out. And that's because of all this bad news. What was the news saying? And here's the answer to that. First off, we had some news involving China. Its central banks have unexpectedly cut their rates, which basically means that because of the slowing demand, because of the fact that their imports and exports aren't really meeting expectations, and the fact that many companies out there are talking about the risk of contagion as we're starting to see bank failures in China, or at least risks of them, and more pain as investors and individuals are not really putting in as much money into the banks. They're not really depositing as much money, and they're not really showing signs of high demand. It's really resembling a recessionary environment. So this is happening despite all the data that they're showing us. And this was some bad news for China, which is a big partner of the US, believe it or not. I know we're not really best friends or anything like that, but we still trade with them like crazy. So this will affect the US as well. This is very important to note. With slowing demand also happening for not just China, but also the USA, and big changes happening to the banking sectors, Fitch has come out and they're warning that they may be forced to downgrade dozens of banks as well. That's including JP Morgan Chase, which was huge news. I warned you guys about this in the morning as well, and this was once again not very, very good news. And with this coming out, they mentioned that they may have to reevaluate the ratings of about 70 US banks, and there could be a lot more downgrades coming as we're starting to see depositors decrease their deposits into banks. We're starting to see slowing demand in the economies, and this is just having a big effect on the banks. The interest rates going up is just really negatively affecting many of them, and it's very important to know this. So all this negative news came out, the market gapped down and started sinking. I didn't really predict this yesterday, but I did warn you guys about this in the morning today. And when news like this happens, it is what it is. We have to just be prepared for it. We have to be ready for anything like this at any given moment as traders, and things like this may continue. Now, when it comes to the fear and greed index for the market's at extreme fear right now in terms of volatility, as the VIX is well above its 50-day moving average. We're starting to see the call and put options together. The overall formation is becoming a lot more neutral, less inclined in one direction. We're also starting to see less greed when it comes to the McCollin Volume Summation Index and many of these other indexes and these other momentum indicators, and they're continuing to look less and less greedy. The market used to be extremely greedy. Now it's just greedy, and it's becoming more neutral, if anything, before it's it could even get closer to the fearful side if we keep dropping like this. But the market's losing a lot of the extreme greed it had previously. The market is slowing down, and this is all part of the process. The best thing to do is to watch the charts carefully and let them dictate your own decisions. It's also very important to be ready for what else is about to happen. So going forward, when it comes to earnings, the Home Depot announced that for the next year or so, there could be declines in their sales. This was some bearish news for many retail stocks out there. Then on top of this, we have Target and TJ Maxx coming out for tomorrow. And then we have Walmart for Thursday. It's going to be very telling, so make sure you're ready for Walmart. Now, when it comes to data, I want to announce something very important. Right now, when the data came out in the morning, we actually saw retail sales a little bit better than expected, which was some good news. Kashkari also spoke, which was he actually was pretty much in the middle today. Didn't say anything too crazy. And besides that, that wasn't really enough to help the markets hold up. Now we have some manufacturing and industrial data all coming out tomorrow morning, but nothing too crazy. But what's going to be crazy later on during the day is going to be the FOMC minutes. The FOMC minutes are basically just like a transcript of the FOMC meeting. We're going to learn more about it, the opinions of different speakers and officials from the Fed, and more insights on the Fed's monetary policy. This is important because this is going to be coming out at 2 o'clock p.m. Eastern Time. When the minutes come out, we're going to see a big reaction from the stock market. It's going to cause the market to either pump or come down pretty hard. Make sure you're ready for this. Expect some high volatility. Okay, so that's going to be a very, very big catalyst for the market for tomorrow. It's going to determine, does the market end up sinking a lot more, or does the market end up bouncing? As far as Tesla goes, Morgan Stanley gave Tesla an equal weight rating, and that is how Tesla performed today, as its beta is above 2.0. The price-price ratio is dropping, which is a sign of relative weakness for Tesla. It's losing lots of strength. And to add on to that, from a technical standpoint, Wednesdays tend to be pretty much green only about 48% of the time, nothing too great. But this doesn't really matter as much because what's going to affect it more is going to be the minutes. Looking at the overall data, we have about 33 million Tesla shares shorted just a couple of days ago. The short interest has gone up just a little bit. And then to add on to this, we're actually seeing volume decreasing on Tesla. So that is a decent sign. We're not seeing insanely aggressive selling on Tesla. Volume is not that high. But at the same time, even if it doesn't have crazy volume, it could still sell off on it because of the external factors affecting the stock market and Tesla as a whole. Now, looking at the short volume percentage, this is still relatively low, but if it starts going up, or at least the short volume relative to price, that could be a bearish signal for Tesla. Now, looking at the wedge on Tesla, we had two main possibilities. I called out this yellow one, right? This gap down to come and maybe a potential bounce. That's what I was predicting from yesterday, but that did not end up playing out because once again, we had all this negative news. So this was the other possibility. Us, if we got more like bad news, I called out this possibility, which would be like a drop to 230. But I was hoping for a bounce like this, where I'm not too sure about this bounce now. It all depends on the FOMC minutes. But going into tomorrow, Tesla is currently sitting at support. So we're going to be looking for this thing to maybe sink a little bit lower to about 230 or so. We have some support right about there. Look for a little rebound on Tesla. And we're going to be watching to see how it reacts to support and resistance. If it rebounds a tiny bit, I don't think it's going to be that big, but just a small rebound, then sideways price action around this 230 area, the very low 230s. Then we're going to see the big reaction after the FOMC minutes. If we get a rug pull, Tesla's going to come tanking down to 225. We have another support down here. 225 is possible if we see some bad data and the market doesn't like it and the market starts sinking. If Tesla bounces off the FOMC minutes, we could see this thing end up pushing right back up to 235 plus. If not, 238 could come next, followed by 240. We also have this unfilled gap at 242. All right, so there are both possibilities. These are support and resistance levels. What is more likely to play out? Honestly, guys, I can't predict that. It depends on the data, but I can tell you that there's a good chance that we might see Tesla drop a tiny bit more in the morning to retest this like 230 area, maybe try to bounce off of that, retest resistance at 233 to 234. And then after that, we're going to be watching to see some sideways price action. Lots of this sideways price action followed by a big reaction after the FOMC minutes come out. If the minutes cause Tesla to sink, you're going to be watching 225 or lower. If the minutes cause Tesla to bounce, you're going to be watching this thing push back up to 236. It all depends on what the Fed ends up announcing this time around. All right, so that's what I'm seeing for Tesla. It could drop a little bit more in the morning tomorrow. 230 could be tested. We might see a small bounce off that, a very tiny rebound back to like 234 or so, back to our 20 EMA. Sideways price action after that. Then we're going to be watching what happens as time goes on because it's still not looking that great. The Fed and the FOMC minutes will determine everything, and just watch it all very carefully. Now for SPY, unfortunately, this is continuing to look relatively weak. It is at support at 442. It could gap down a little bit and then try to bounce just a tiny bit, get a very, very small rebound. I think it's going to drop a little bit more in the morning, test like 442, if not 441.5, then get a rebound, a very small one to about 444, reject off that, and just trade sideways around the range between 442 and 444, going back and forth. Very boring price action for tomorrow, approaching the FOMC minutes at 2 p.m. Eastern time. Then I think we're just gonna, be very boring, very sideways, and we're gonna see what happens after that. I mean, the Fed is just going to determine which way we go. If we get a bullish outcome, we could see this thing make its way back up to 447 plus. If not, this thing could tank all the way down to 438 or lower, or even 437.5. Those are real possibilities, depending on what the Fed ends up announcing. For Apple stock, unfortunately, it's looking more bearish. From a technical standpoint, it looks like it's going to maybe just try to drop to about 176.5 in the morning, then try to rebound off that and retest the 177 zone, trade sideways around there, then get a big reaction after the FOMC minutes. If the minutes cause a pump, watch 178 plus. If they cause another dump, watch 176.5, if not 175 on Apple. This looks a little more bearish as we have a head and shoulders like pattern from a technical standpoint. 176.5 may be tested for tomorrow. The odds do favor that, either during the pre-market or very early in the morning before this thing tries to rebound to like 177, then trade sideways and once again get a reaction after the FOMC minutes. That's what the odds favor based off technicals. Now for the QQQ, we have resistance around 367.5, 368, 369.7, and 370. We have support at about this 366 level. If that fails us, then we have 365, 364.69, and 363 below that. What seems more likely to happen, I think this thing may come down a little bit more and retest 364.69 tomorrow. Once again, completing the head and shoulders, drop a little bit more, then try to rebound, retest 366 or so, maybe go a little higher. 367 is on the table to 366. Trade very, very sideways after that, reject, and just continue to trade sideways around 366 to 365. Go back and forth for the majority of the day. And then we're going to see a very big reaction after the FOMC minutes. If they pump us, we're going to see this thing go up all the way back up to about 368 to 370. If they cause a rug pull, we could see the QQQ drop all the way down to 362 or lower, to much lower levels. So make sure you're ready for that. It all depends on the FOMC minutes at 2 p.m. For Nvidia stock, we had a bearish divergence that developed in the morning. I called this out and told you guys we might see this thing come all the way down to about 440 or so. And this thing actually came down, and I told you if that broke, then 436 was a possibility. We came very close to that target, and now the real question is how will this move? From a technical standpoint, the MACD is looking a lot more bearish on the 30-minute time frame. On the 4-hour time frame, it's also not looking as strong. We're going to be watching previous resistance become support. So right about here, we're going to be watching this support. There's also some support right here, technically like 436. So 436 is going to be the next level. If that breaks, then we're going to be watching around 425. Then we have 421 below that as support. If those sink, it could even drop even lower than that if 420 breaks. For resistance, you're going to be watching 440 flat, 440 to 442, and then above that, if it breaks, this thing could make its way back up to about 446, then 452 above that. What do I think is more likely to happen though, right? It's more probable that it's Nvidia. If this thing ends up like continuing to drop, it might come down to about 436 tomorrow morning, if not 434. Could even go a little bit lower. We could see the very low 430s and a bounce after that, and then a rebound with very, very sideways price action. I think it's just going to trade sideways between its range, between like 436 to 440, going back and forth and back and forth. And then we're going to see a big move after the minutes come out. If the minutes pump the market nicely, we could see Nvidia go all the way up to about 452 plus. If not, it could come all the way back down to 420 or lower. It all depends on the minutes. What does the Fed end up causing? For Microsoft, it's the same thing. We have resistance right about here around this 322 area. Above that, we have 324. And then we have support at about 320. And below that, we have even lower levels, such as 319 and 317. In my opinion, it looks to me like this thing could be potentially trying to base around this 319 area. It could drop a little bit lower. We might see it actually retest like 320 or so, then bounce off that and retest 322, trade sideways, then react to the big data. For AMD, it's the same thing. It's looking a little bit weaker. I'm going to be watching this thing sink down to about 109, bounce off that, trade sideways around this 111 area, and then get a big reaction depending on what happens with the minutes. For Netflix, it's not looking that great. It's on a slight downtrend right now. So we might see this thing actually pop a little bit to 425, reject, come down to about 418, bounce off that, and continue to trade sideways before we get a big reaction after the FOMC minutes. Looking at the Nasdaq, not looking that great. Could be forming like a double bottom like structure. I think it's going to test this 13,582 area, bounce off that. So it could drop a little bit more with the QQQ, bounce a little bit, and then continue to sink depending on the FOMC minutes or not for sideways price action. I think SPX could also drop a little bit more. It's still looking relatively weak on the 30 minutes, also on the 4-hour. We could be seeing this thing based around 4,400 flat, dropping a little bit lower, then trying to bounce off that. Then it could actually make its way up a little bit higher. And then we might see another rebound from there. Did I say 4,400 flat? I meant 4,425. Sorry, it could drop a little bit lower to there, then rebound a little bit, retest 4,440, then just start trading sideways. And we're going to be seeing a big move after that. So if the FOMC minutes cause a big drop, it's going to test 4,400 flat. And if that fails us, it could come even lower than that, to much lower levels into the 4,300s. If not, if we get a big bounce thanks to the FOMC minutes, it could make its way up to about 4,460 plus. So we're going to be watching these very carefully. On the VIX, it has a possible head and shoulders developing, but I'm not really counting on anything for now because it all depends on the data. We have a left shoulder, a head, and a right shoulder that's still valid, but it hasn't really dropped too much. If the minutes cause a big drop in the stock market, we could see the VIX fly to 18 plus. If the market ends up rebounding thanks to the minutes, we could see the VIX come all the way back down to fill this gap to the 13.8 area because of the market pumping. Always be open-minded just to be safe. The dollar is holding up at support so far, so we're going to be watching this to see how it reacts. If the minutes cause a big drop in the stock market, we could see the dollar push up to about 103.5 plus. If the opposite happens, we could see this thing sink down to about 102.8. So we're going to be watching that very carefully. Coinbase looks like it may touch the 78s, then bounce off that, try to make its way back up to about 79.79, then just trade sideways after a 20 EMA test. So that seems very probable. We're going to be watching to see how that reacts. It may just get lots of sideways price action until we get a big reaction after the minutes. Good data is going to, if it pumps the markets, this could cause Coinbase to make its way up back to 82 to 84. If not, bad data is going to cause this thing to sink down below 78 or lower. For Google, we're going to be watching these levels very, very carefully. If we get good data, this thing could get a bounce eventually. If not, it may not. It does look like it has a head and shoulder, so it might actually come down initially. It's about 129.5 around this area. Bounce off that to retest 130.34. Trade sideways after that, and then we're going to see a big move. If we get good data, 132 is a possibility. If not, it could sink all the way down below 129, down to like 128 or lower. It is looking more bearish for now from a technical standpoint, however, so we're just going to be watching this for the short term. Looking at the 10-year Treasury yield, this is currently on a nice uptrend. If it keeps uptrending like this could be bearish for the markets, but it all depends on how it reacts to resistance. There's a bearish divergence that formed right here. So if it does end up sinking, this really depends on different factors. I'm not sure which way it's going to go just yet. Could this be like a head and shoulders? I'm not 100% sure. I'm just going to be watching this intraday just to be safe. It really depends on what the Fed announces. For Amazon stock, this is once again not looking that great in my opinion. You can see it's sitting at support at around this like 137 area. It could drop a little lower to like 137 flat, then try to rebound and retest 138.36 to 138.5. Trade sideways. Then after that, we might see it just continue to move. It may actually sink a little lower to 137 first, bounce off that trade sideways. Then we're going to be watching, does the minutes end up causing the markets to start pushing? Does the FOMC minutes report cause that? Does it cause Amazon, the whole market, to push up? If that's the case, we could see 141 being retested. If not, a break above that's a 141.6. If it fails to do so, if the market ends up coming down after the minutes are released, we could see Amazon sink to 135 or lower. It all depends on the data. For Meta, I'm anticipating that Meta could actually come down a little bit lower once we see this. It's very important that we note that there is a distributive phase developing on it. So it's very important to be prepared for that. And looking at the way it's been moving, it's just not looking that great. I just want to mention that when things like this happen in the markets, it's very important to be open minded nonetheless. And I think that at least looking at technicals and such, we have to be prepared for anything. So my software is kind of frozen right now. Still waiting for this to load. But anyways, I think I might just like cut it from here. Meta could retest 298, then bounce and just trade sideways. And after that, it all depends on the data. I mean, if Meta gets a really, really nice bounce, 308 is possible. If not, it could sink down to the 290s, the very low 290s. That becomes a real possibility as well. But anyways, I just want the best for everyone. Please remain calm, cool, and collect, and do what you have to do. I want to get this video out there as fast as possible. So please watch Support and Resistance and do what's best for your own portfolios. Be open-minded in a very volatile market like this, and get ready for some crazy price action tomorrow once the minutes are released. All right, so thank you for listening. Have a great day. Market to the moon, as the long term is still incredibly bright despite these short term fluctuations. And peace out.